and welcome to this week's Go No Go show, May 18th. My name is Tyler Wood. I'm a CMT charter holder, and I'm joined today by Alex Cole. How you doing, my friend?
How are you, sir?
I'm great. How's the chief of charts? How's life in New Jersey?
I'm all right. It's nice over here in New Jersey. It's cooler, nice and cool for this Welshman. When it gets up in the 80s, it's too hot.
Yeah, I'm with you. Although it was 31 degrees when I woke up upstate New York, and we did have a fire in the fireplace going last night. It's winter's last licks before we get into the summer heat wave. But Speaking of things heating up, stock markets. We're going to get to chart of the S&P 500 here in just a minute. Heating up as well. Let's dive into our asset class heat map just to take a look at the broad view of markets right now.
Yeah, absolutely. And you can see we've got the same picture to a large extent that we've had now for a week or so. Equities able to maintain their go trend. We've seen this sort of range bound. We've been talking about it since the symposium, how we could be stuck in a range for a while, but we are holding go colors, and we seem to be testing the top of that range as we maintain the strong blue colors in equity markets. You can see that in the top panel here. Treasury bond prices have moved into stronger purple bars for the majority of this week. Commodities stay in a go trend, but they have weakened. And of course, the big change that we talked about beginning of the week and the end of last week actually was the dollar moving to go colors. And you can see that strengthened so far this week.
Absolutely. Strength in the U.S. dollar, yields drifting higher, but U.S. equity markets pushing up against those resistance levels. Let's turn our eye to the chart of the S&P 500. Take a closer look at that price action. Had some strong up days, and looking at perhaps testing or even breaking through. This is midday Thursday, May 18th. So on a daily basis, we don't have our close in yet, and What are we seeing from that breakout of the go no go squeeze down in that lower panel of the go no go oscillator?
Yeah, we wonder if we're breaking out. Personally, well, not to give my opinion, of course, that'd be crazy. But
market doesn't care about our opinion, but we'll give it anyway.
We talk a lot about the importance of the closing price, Tyler, and how when the close comes in, that's the sort of the settled price for the day, what the market agrees upon as value for that security. But on a closing basis, we may be slightly edging higher here, but I would love to see, I guess this is my opinion, I would love to see the close higher than the high from February. That's just, I think that it would be nice to see us close higher than the intraday high from February, and then we'd be given a chance then to consolidate above those highs if price moves sideways for any length of time. But the bottom panel that you were talking about was, we saw this max go-no-go squeeze as the oscillator rode the zero line for several bars. We saw that price action shrink here, the volatility compression. And then, of course, yesterday's healthy bar caused us to break out of the squeeze. And that tells us that momentum is now resurgent in the direction of the go trend. And you can see that gives us this continuation icon, this green circle underneath the price bar. And today now we've moved higher, we've come back. So we'll want to see where we close, that closing price being, of course, so important.
Absolutely. On a different show earlier today, we were looking at the Qs, NASDAQ 100 on an intraday basis, and some of the sizable moves. For those of you who trade shorter terms, that trend continuation on like a 30-minute chart was very present over the last several days, and strong gains on an intraday basis. Alex, let's jump that out to a weekly chart, which I think is probably the question on a lot of investors' minds, where we've been stuck in this sideways range. A decisive breakout at the close on a daily chart. Closing prices hold more weight, but a closing price on the weekly chart is certainly going to have a heavier impact on our overall analysis for that longer term chart. What are you seeing on the weekly right now?
Well, and it's interesting because the breakout we were talking about on the daily chart was relative to February highs. The weekly chart, of course, has got to worry about the highs from last year in August. So, of course, if we can move a little bit higher, then we'll get a new higher high, right, on an intermediate term basis. We've had a couple of higher lows. We'd love to see a higher high. And then, of course, we'll be able to track back to this high in August to see if we can deal with that resistance as well. But a healthy looking chart on the longer time frame, a string of uninterrupted gold colored bars as we try to make a new higher high, oscillator finding support, and now, of course, quite clearly into positive territory, but not yet overbought.
Yep. So we're at that resistance level around the 4,100 mark. Next resistance area around 4,200 from those August 2022 counter trend rallies that were so seductive and so dangerous for a lot of investors during the bear market. So let's switch our eye to some of those macro influences. From the cross asset map, we talked about treasury bond prices moving lower. So of course, inverse to sovereign bond yields. And when we look at the TNX on this daily basis, we're back in a go trend. Talk to us a little bit about what we're seeing from a trend perspective here, Alex.
Yeah, sharp move on the right side of this chart over the last few days. You could see how we'd really been trading in a range here, and then we were able to clearly break back into positive territory and paint a couple of three aqua go bars here. So again, at resistance, you can see that resistance from the range, but the first time we've been testing that resistance in go bars. So, you know, rising treasury rates, of course, not the best thing that you might hope for in terms of equity prices continuing higher, but remember that things can move wherever they want.
Certainly, certainly. Let's look at this on a weekly basis as well, just for that longer term perspective. Still in neutral on a weekly basis. Certainly not a decisive move in either direction in terms of the rising rate environment. A lot of analysts talking at the symposium about just being higher for longer, not necessarily ripping to new highs, and perhaps the rate of change for interest rates and yields on these sovereign bonds is perhaps most important for the market to digest. So the rate of change not very high as we are in sort of a bullish consolidation sideways, go trend on the daily.
Yeah, and as you can see from the weekly, that in terms of rate of change, you're looking at our momentum oscillator here, really sticking with and around the zero line. So there's not a lot of directional momentum, as you said, and I think that's been a common theme. Are we in an environment of continually rising rates, or are we in an elevated rate environment from where we've been historically? And I don't think people are thinking the rates are going to come crashing down anytime soon, but they could just remain elevated for some time, not necessarily go higher or lower. So it'll be interesting to see where we go from here.
Well, let's switch over to a view of the US dollar. Here at GoNoGo Charts, we use an ETF proxy for the dollar index. UUP is the ticker symbol. That's the weekly chart. Let's take a look at the daily first, which was reflected on that cross-asset heat map. Strengthening US dollar in a go trend. What are you seeing in terms of the next area of resistance here, Alex?
Well, there's, of course, these prior highs here that you can see from March, but you know, this was a nice healthy change to a go trend in terms of rising dollar prices. You saw the amber bar, you saw us break out of the max squeeze. And if you take out these blips, Tyler, this would have been an extremely extended go-no-go squeeze. So we really had very little directional momentum for a long time, really for almost a month. If you take out these blips, this would have been an extended squeeze for this whole time. So then the squeeze rose again to a max. We broke out of it. And now we're clearly into positive territory, and we're approaching overbought as the price trend, strengthens to stronger blue bars. And what I wanted to show on the weekly was this is that directionless momentum that we've been talking about there on the longer time frame. We'd been in a very extended squeeze on the longer time frame as well, and now we seem to be breaking out of that squeeze into positive territory as we go back to an amber go fish bar on the price trend. So certainly some reasons to think that dollar prices may move higher from here on.
Absolutely. A multi-month momentum neutral reading. That's a mouthful. I know for currency traders, looking at a weekly chart is probably blasphemy. That's often a realm of shorter term trading. But for those of us who are looking at these cross-asset charts as an influence to our equity positioning, certainly zooming out to understand the context of where we're at is very, very helpful. Let's turn over to a chart of gold, sort of a consistently inverse relationship to the U.S. dollar. And sure enough, we're seeing a no-go in gold prices.
Yeah, so one of the big conversations over the last several weeks was that all-time high, and could we break above the multi-year, decade-long cup and handle pattern that we'd seen? And here, I think people were thinking perhaps we could, but we've fallen away, and we saw the oscillator break below zero. We saw an amber go fish bar, and then now we're seeing a pink no-go bar. So perhaps a more drawn-out correction here against the larger move that you'd see on a weekly chart.
Mm-hmm. Absolutely. And we've got perhaps some support areas down around the 170 mark on this ETF for GLD. Yeah.
And excellent. Even higher, even where we are now, really, if you look back, we're sort of in a range. We're at these highs over here.
Yep.
So interesting.
Interesting to contemplate. Let's turn our eye over to U.S. oil, as we always do each week.
Yep, and I'm going straight to our weekly chart because that's where there's been no real change.
Yeah.
You can see the chop on the daily chart has really just allowed the larger time frame trend to continue. Mm-hmm. We did watch closely here as the oscillator broke above zero, but we stayed in no-go bars, and we stayed in making lower highs and lower lows. Mm-hmm. And we've got another trend continuation icon here as we went back below zero on heavy volume, of course, using USO, the United States Oil Fund. And we're in strong purple no-go bars again.
Absolutely. I think it's worth noting to all of our viewers, regardless of what technical analysis tools you like to use, whatever's in your toolkit, price is our most important indicator of all. So in terms of trade decisions, we're looking at price and price trends first and foremost. And we use these other tools to give confirmation or to point out divergences where we might see trend exhaustion, trend reversal, or trend strengthening, right? Where in the case of those trend continuations, where momentum is surging in the direction of the underlying trend. But price is a fact. Price is our most important indicator of all, and certainly on this weekly basis for U.S. oil, seeing that drift lower. The tide is slowly rolling out of what was a very strong move last year. So let's take a look at our crypto rel map, right? There are 5 asset classes now. Bitcoin conference happening in Miami this year. I'm going to venture to guess, Alex, that it's perhaps a little less fervent, maybe a little less froth at the Bitcoin conference here in 2023 than what we saw in 2021 around the same time frame.
Yeah.
We've talked for the last several weeks on a relative basis, top 4 by market cap cryptocurrencies outperforming the S&P 500. And here we've seen them all roll over into no-go relative trends.
Yeah.
Bitcoin certainly taking the lead in its own absolute no-go trend. What can you talk to us about in terms of areas of support or potential trend reversal for this?
Yeah, I think it's a I don't know if it's yours. I'm sure it isn't. I'm sure that it's been said many times before you, but I've heard you say it a number of times about how...
I have no original thoughts, Alex. Everything I've said comes from somebody smarter than me.
Do any of us really, right? It's we've had a long history as human beings, but we talk about taking the stairs on the way up, and we've seen these moves, these pushes higher, and then these corrections, and then another push higher, and then now a correction. So the obvious level of support would be the highs of the previous push higher, right? So I think a lot of people watching this space would hope that support is found fairly soon, right? So we're not far away from that 25,500 level where we would expect to see some support from these levels earlier in the chart. Having said that, at the moment, strong no-go bars, no-go continuation. And as you can see, relative to equities, certainly the crypto market rolled over. And that's really because the equity markets, if you remember, are holding their own as they move sideways. So that relative outperformance of equities is clearer to see when you look at it as a ratio.
Absolutely. And we look at all of these on a relative basis as well as their absolute trends. Just to think about asset allocation, if you want to beat benchmarks, you've got to own the things that are beating the benchmark. So we look at a lot of these cross-asset relationships on a relative basis to better understand where trends are persisting, where leaders and laggards are at. So Alex, let's turn back to the equities markets here in the United States. Let's get under the hood of the S&P 500 with our Go No Go sector rel map.
Yeah.
For those of you who are new to this show, if you're watching for the first time, the colors that we're seeing on screen are the same things that we're using in the Go No Go trend. That's a composite blend of all the most widely used and heavily back-tested technical trend concepts, things like Donchian channels, multiple moving averages, parabolic SAR, and many, many more. And what we do is do all that computation in the background, and we use a simple color-coded chart to remove our analysis paralysis. Now we're taking that a step further, and instead of looking at all of the price action, we're looking simply at the trend condition itself. So these bands in this heat map are telling us what is in a go trend relative to the S&P 500. So it's every sector group of the S&P 500 index relative to that benchmark. And what I'm seeing is that consumer discretionary has joined the growth equity counterparts in information technology and communications. And we've seen a rollover in our defensive sectors. So healthcare, staples, and utilities all in strong no-go trends relative to the S&P. So when we're talking about leadership, we've got those growth equity sectors really leading the charge and leading this market higher.
Yeah. It's a very interesting map because if you remember, if you pretend we were a little bit further back, we were talking about this bifurcation where we had leadership from tech and communications, but we were seeing, generally speaking, we were seeing healthcare, staples, utilities also outperforming. And that is what's been shifting. If you move the chart forward, we now have only the outperformance in the growth sectors. As you said, the three on the lower panels here rolled over to join everything else in relative underperformance. So growth leading again. And what does that mean? Does that mean that perhaps there'll be enough of a push to get equity prices to a new high? Remember, the S&P is largely made up of these high market cap growth names. And now the relative outperformance is certainly back amongst those sectors.
Absolutely. So our next step at Go No Go Charts and what we produce for our institutional subscribers each week in Go No Go Research, Flight Path Monday morning is sort of a top-down perspective where we start with these asset classes, get into the sector groups, and then our next step is to look at the industry groups that comprise the individual sectors. So just to save a little time, if we pick on the consumer discretionary sector today as having joined the leadership groups, there were two industry subgroups that have been consistently outperforming that we really need to point out. One is going to be our broadline retailers, and the second is the home construction index. And we looked at home builders over the last several weeks, strong go trends outperforming. But let's pull up a chart of Marks and Spencer. Obviously, in the broadline retailers space, you've got Alibaba and Amazon and many other familiar names. But let's take a look at what has been a persistent go trend on a daily basis, really for quite some time here.
Yeah, and I'm just throwing a trend line on here because, of course, we like to keep the charts clean enough to be able to look at areas of supply and demand and market levels that might be really important to look at. Mm-hmm. And yes, it's been persistent. Now, we are seeing a few cracks. You can see how the oscillator, which we would have liked to have seen stay above the zero line, or at least at zero, you can see how after a max squeeze, we've broken now into negative territory. But look where we are. We are at levels where we could expect some support. So an interesting bar, too, if you bear with us and zoom in on that one. You know, look at that. We've opened and we've moved a little bit, and then we are very, very much at the same level. So will that end as a doji? We'll have to wait and see. But very little movement today. Gap lower and then really has held where it started. Really not a lot of downward pressure since the open, but also not a lot of push to the upside either. So we'll see if we can hold these levels that could act as support, or if this negative momentum is going to lead us into a little bit larger of a correction.
And let's take a look at this chart of Marks and Spencer against the consumer discretionary sector group. So MAKSY over XLY. And we can see on a relative basis as well, the strong outperformance since the middle of 2022. And here on a relative basis, we're just rolling over against the consumer discretionary sector.
Yeah, so if you were looking for that support on the pure chart, you could turn to this to just make sure you're careful. We're seeing some actual relative underperformance now versus the sector itself.
Absolutely. Let's pull up let's look over at our home builders. The first one I want to pull up is Pulte, PHM.
That's a little absurd.
Fairly consistent.
I mean, what do we say in all training classes? Price does not move in a straight line. Well, that's about as close as you could get. And look at the oscillator. That's wild, and we've seen that from time to time. But it's holding these overbought levels, and we know plenty of money managers that buy overbought conditions, right? Because what does that mean? Really, it just means a lot of enthusiasm. So if the trend is strong enough, you certainly could maintain those levels. And I mean, that's an incredible move higher for Pulte.
Absolutely. Let's do the same thing. Let's look at Pulte relative to the consumer discretionary sector. And I know when we think about discretionary spending, people are immediately thinking about Teslas or luxury goods. But home building in the United States, when so many economists are talking about this coming recession, certainly not seeing it in the home builders index, and relative to the discretionary sector, Pulte is outperforming strongly.
I mean, it certainly is discretionary spending, isn't it? You don't need to remodel your kitchen if you don't have the money. It's discretionary spending.
No, you have to remodel your kitchen, Alex. How else do they know that you're doing well? Couple things that I want to point out just from a more evergreen educational perspective. When we think about the life cycle of a trade as trend followers, we're often talking about position sizing, broad diversification, capturing trends from lots of different markets. But then when we get down to our trading rules, right, we need to cut our losses short. So we need to have clearly defined risk management, something that tells you it is turned to a no-go, for example. But when we are in a trending market, we can also look to trend continuation as a chance to either enter an existing trend or to size up positions. So if you've read the textbooks and done some research around pyramiding into your position, there are a lot of money managers who think about maybe dipping a toe in the water as trends are beginning and then scaling up as the trend persists. So what we have done with Go-No-Go charts, right? When we think about all of the TikTok traders that refer to just buy the dip, right? Buy the dip. That's that works well in upward trending markets, not so well in range bound or bear market territory. But what we've got here is a very clear depiction of momentum finding support at the neutral level, not breaking to negative momentum, meaning there is no enthusiastic selling on this particular security throughout this go trend. And each time the oscillator comes back to zero and finds support, it takes off again, surging in the direction of the underlying trend. And that's really the sweet spot for trend followers. When momentum resurges in the underlying trend, you have confirmation that the price action could continue higher. So we've picked those out for you, those spots, the interplay between what are not related computations, the Go-No-Go trend in the top panel and the Go-No-Go oscillator in the lower panel. When that oscillator finds support at zero and surges again, we've got that trend continuation icon for you right on the price panel with those green circles. And that's really the sort of the lifeblood of trend following, is being able to stick with something throughout the meat of the move. For a lot of trend followers, one of the most difficult things is to not cash out a move that's already taken you 15, 20, 30% higher. If indeed that trend is to persist, you want to stick with it. So this is the stick with it signal from Go-No-Go charts.
Absolutely.
And Alex, do you want to talk a little bit about the counter trend correction arrows as well?
Yeah, absolutely. So, we momentum is really the next place that you turn as an analyst after understanding trend identification. And the traditional use of momentum is to look for mean reversion scenarios or to understand when prices swung too fast in a direction. And so with a good momentum oscillator, you think of something like RSI, when it goes overbought and it comes back below its 70 or below whatever level you set, we consider that a short-term sell from momentum. Now, we don't like to call that a change in trend, but it will certainly suggest that in the short term, price may struggle to go higher because there's been such a move over such a short period of time. And so when our oscillator is overbought and comes back below a level of 5, then we're going to throw these counter trend correction arrows on the chart. Just to tell you, the trend is still in place. We know that, of course, from the trend indicator painting gold-colored bars. But the red arrow or the red triangle here suggests that in the short term, there may be a struggle to go higher as there's some cooling of positive momentum. And you can see that happens here. We move sideways here. We don't really correct, but we move sideways before then. A resurgence of momentum, we move higher again. In the middle of the chart, it's more of a sideways correction, right? Corrections can be sideways. And then here again, we've got a slight pullback. But then every time, no breaking of the trend and resurgent momentum being represented by these circles, these green circles, as the oscillator finds support at 0, and then we move higher. Now, in really strong moves, we know we can have multiple correction icons here, even as price goes higher. We know that from looking at things like RSI and others, that in a very strong move, you're going to see overbought conditions over and over as people pile into the trade.
Absolutely. Alex, as always, it's a pleasure to talk markets with you. And for those of you who are watching this on Stock Charts YouTube channel, thanks so much for liking and subscribing to that. You can also check out Go No Go Charts or head over to our website, www.gonogocharts.com, for a ton of educational webinars, videos, explanation of these tools, and much more from our research. So thank you so much for watching. We'll see you again next Thursday at 3:30 Eastern.